episode of the Industrial Real Estate Podcast with Comreal. I'm Edison Vasquez, your host. Thanks for joining us today. I'm glad that we're able to be here today and share another episode of the Industrial Real Estate Podcast. This is episode number 20th. Thanks for following us and getting through the episode 20, and hopefully we keep going more episodes as we move along. In episode 20, we are discussing how industrial investors can avoid analysis paralysis, very common when buyers are looking at industrial deals to buy as an investment or as a user. And my name is Edison Vasquez. I'm part of the industrial team here at Comreal. Our team specializes in leasing and sales of industrial properties here in South Florida, and we help customers across the country through a network of CCIM and SIOR. We have customers that need space here in South Florida and across the country that we can help them locate space. You can find me on Instagram at Edison Industrial, on Twitter at Edison CRE, on LinkedIn at Edison Vasquez PA, and of course you can visit our website at warehousesmarket.com, where you can find all our information and our latest listings, and you can leave us your comments and feedback. You can listen to this podcast on Apple Podcasts, Google Play, and all the platforms for podcasts. Additionally, you can watch us on our YouTube channel at youtube.com/ComrealEdison. There you'll see all the episodes in the past. Additionally, all the videos that we make with different tips and information on the industrial real estate market. So thanks for following us, and thanks for everyone who leaves us their comment and feedback. So episode 20, how industrial investors can avoid analysis paralysis. And that's something common in this type of environment where buyers are trying to get a deal, but at the same time they don't want to make a mistake and overpay for a property. So we see this trend, and we see this on a strong market, on a weak market, and we see this from new and seasoned investors who tend to overanalyze an investment or a purchase of an investment, and through that they miss an opportunity to buy the property. It's totally normal. We're humans. We don't want to make mistakes. We don't want to overpay for properties. We don't want to lose money. So it's natural for us to have the resistance of taking our time and finding all the information. Through our work, we see many buyers trying to find as much information as possible during the process, and before even making an offer. And by the time they realize, whether it's a month, 2 months, or days, the property is no longer available, the deal is no longer available, so the time was wasted in doing those analysis, and the property is no longer available. So in this episode, we try to give you some tips on how to avoid that, and explain some things that can help buyers go through the process without having to suffer analysis paralysis. And this comes from our website blog that we actually just posted on how industrial investors can avoid analysis paralysis. If you go to our website under market resources and blog, you'll see our blog post, and the latest one it's dedicated to that. So we picked the top 5. There's 8 total tips that can help avoid analysis paralysis, and we picked the top 5 that we think are good. And of course you can read the entire article in our website and look at all the points that we explained. So again, number 1 is cost. As always, no surprise, all investors, buyers, want to know the cost. They want to ask the price. What is the price? What are the terms? What is the seller willing to sell it for? What can I make a deal at? And it's true. We want to understand the cost and pay the right price, and we want to get the deal and not overpay. At the same time, when buyers concentrate too much on the cost and the price, they forget what they could miss, or what they're missing by not taking action, and by not buying the property, and by taking the time to analyze and then miss on the deal. So there's also an opportunity cost in this case for missing the deal. So buyers tend to not factor that in. So if you're looking at a property, you concentrate on the purchase price per square foot, how much you're paying for it, but you are not factoring in how much you could miss if you don't get the deal. So that's something that that can help you push through that resistance when you're looking at deals. So if you're looking at a property and you tend to look on the price, also factor in what you will miss if you don't get the deal, if you don't get the right price. So if you're willing to pay the price now, then if you wait too long, then you might not be able to get that opportunity. So in the long term, you will miss out that price. So in general, so if you're looking at a deal, it's okay to look at the price per square foot, the selling price, but also look at what the opportunity cost will be if you don't get that deal, if you miss out on that. So that's something that can help you push through, make the deal, and maybe come up closer to where the seller is and try to make a deal and land the property. And number two tip that can help you is think of timing. Every buyer look at the property and don't want to overpay, want to pay the right price or below market or market deal. But they also don't think about the time that they're holding. So if you think about whether it could be 5 years, 10 years, or forever, who knows? Maybe you're Warren Buffett and you want to hold the property forever. And then the timing helps you and it works in your favor. So if you want to buy the property, and even if you pay an extra couple $1,000s, or in the case of a large property, a couple $100,000 in the time period, the holding period, that extra money will be less relevant and will become minimal compared to what you have made on the property and compared to what you have made, in this case, in capital gains or dividends from the property. So when you're looking at the property, also think about the holding time. If it's 5 years, 10 years, not necessarily what you will pay, but what is that extra couple $1,000s or $100,000 difference it's going to make over that period of time. Is it really going to make the deal, break you the deal, or is it going to, not necessarily bankrupt you, but is that extra 5,000 or 100,000 in the case of large deals are going to make a difference in the holding period? So over 5, 10, 20, 50 years, is that $100,000 or whatever extra you think you need to pay for that property, is that going to make a difference? So that's something that can help you push through that analysis paralysis, instead of thinking of, oh, I have to get the right price today, or I'm going to overprice. But think about it, how that will be over 5, 10, 20, or whatever time horizon you expect to hold the property. Number 3, repairs. Very important, and buyers ask the right questions, and one of the more important questions they ask is the roof. What is the age of the roof? When it was changed? Any leaks? Which is totally normal, and we recommend all buyers to do that. At the same time, when buyers tend to dig too deeper into getting every single detail, then we run into analysis paralysis. So what we recommend is to do a quickly assess any repairs needed and concentrate on the large expenses, in this case the roof, structural, any electrical, mechanical, anything that's large investment that's going to cost and that may cause unforeseen expenses. The smaller ones, cosmetic, painting, floors, windows, moving walls, lighting, those might be minor expenses that, again, in the long term may not make a lot of difference in your return, and can help you push through this analysis paralysis and get you the deal. So when you're looking at the property, quickly assess what are the repairs that needs to be done, concentrate on the large expenses, and go from there. And then you can see whether the property makes sense or not. Once you see if the roof needs to be replaced or what needs to be done, major repairs, and then once you have it under contract, once you have control of the property, then you can go and pick out every single detail and get a true estimate of every single line item, from the floors to the lights and everything that needs to be done during due diligence. But now you have control of the property, so don't wait until until you get all the information to make an offer. Make an offer, get it under control, get it under contract, take it off the market, and then you start doing your inspections for that. So in the case of also of open permits, a lot of buyers want to know open permits, any violations. It's totally normal, you have to do that and you should do that, but do it under due diligence, not before you make an offer or before you get the property under contract. It will be a waste of time to do that before you get control of the property. So that's repairs. Next is the property class. So in the property class, there is every investor may have their criteria. Some investors are more open than others. And in this case, to avoid paralysis or being just standing, be flexible and look at options. Many investors might be concentrated only on the Class A, 32 clear, high ceilings, brand new development with a Class A tenant for 10 years. So those deals are very competitive, and they trade at very, very high rates, low cap rates, and it's challenging. So and then you are going to analyze those and miss out on opportunities where you could add value in other sectors, like Class C or truck terminals or properties that have extra yard, extra parking that can yield more in the long term. So be flexible, look at other options, and don't paralyze yourself with just looking at one property that may not give you the flexibility and just make you miss opportunities outside your target. And last one on this is local loss. Same as repairs. Just do a quick assessment of what the zoning is. If you're buying it for a business, make sure the zoning allows for the type of use. If it's manufacturing, if it's cold storage, if it's mechanic, if it's light distribution or light manufacturing, if there's chemicals involved, you can quickly do a search on the municipality and see if it's allowed. And same thing as an investor, if you're looking at as an investment, you can check if it's an industrial zoning, and if all the tenants are there are allowed to use that. You can make a quick assessment of that. Then once you have it under control, once you make a deal, you have it under contract, you can go deeper into digging more, getting letters from the county, letters from the city, confirming the use that you are going to use, and potentially if you're going to use the building, get the appropriate permit, apply for the zoning, or if it needs to be rezoned, you can do that during the due diligence period. But more importantly, just check a quick assessment that will at least get you up somewhat of a pre-approval on the zoning on end use, and then once you have it under contract, you can go deeper and get more authorization and more confirmation from the municipality about the use that you will be doing the property. So those are the top 5 that we pick and that we want to feature in this podcast. Again, you can go to our website, warehousesmarket.com. Under blog, you will see the entire article, how industrial investors can avoid analysis paralysis. And here we have 8 topics, 8 things that investors can do to avoid being sitting on the sidelines and overanalyzing a deal and then missing out on the deal. So these are things that we have learned and that can help investors and users move forward without having to stay there and miss out on the deal. So hope this helps. Again, one of our team members is happy to help you. If you have any questions, you can email us, call us, and we'll be happy to guide you or answer any questions you may have on this type of topic. And we're happy to help you with any search of the property and also on the sale of an industrial property. The next section in our podcast is feature property. And although we have done feature properties in the past, we also work with buyers and tenants in the search of properties to purchase and properties to lease. So in this episode, we want to feature a requirement that we have from one of our clients. And again, you can go to our website under properties. You'll see property needs. And there you can see the outline of all the requirements that we have from our customers, from 10,000 to parking. And in this specific episode, we want to feature a requirement for a perishables company that's looking to lease or purchase 50,000 to 100,000 square feet of industrial space, ideally with refrigeration, although they can install the refrigeration, and this would be to lease or purchase with a minimum office of about 5,000 square feet. And they would like to be close to Miami International Airport, but the closer the better, but they're flexible to move if there's something a little far, not too close to the airport, but they would like to be in a couple miles from that location. And so if you're an owner, or if you are a tenant and have a space and looking to lease or sell the property, then please send us an email or give us a call, and we'd love to discuss the opportunity to bring a tenant or a buyer for the building. Again, it's 50 to 100,000 square feet to purchase or lease, with refrigeration ideal, but it doesn't have to be refrigeration. They can install the refrigeration, but the size has to be 50 to 100,000 square feet. The target space will be 60 to 70,000 is the sweet spot of space, but we want to broaden the range to make sure we look at all other options. And so that's the requirement that we have. Again, if you're an owner and has some space, 50 to 100,000 square feet to lease or purchase, please let us know, and we'll be happy to present that to our client looking to lease or purchase. The next session is the industrial tip, and a lot of you have given us good comments about this on our social media, and we love seeing those feedback, and I'm glad it helps some owners with different things that we post on our Instagram or LinkedIn or Twitter. The industrial tip for today is related to what we are discussing. Is basically where we want buyers to take action, and I know you see me mentioning this a lot on social media. How we want buyers to commit to a deal, we want them to push and make an offer, and it's not because we are brokers and we want to make a deal, it's because we don't want the buyers to miss out on the opportunity. And it applies for tenants too. Tenants can look at a space and overthink the design, overthink the loading, and in a month or 2 or weeks that space is gone. And so we want to push buyers and tenants to commit to a space. If the space is closely matches what you're looking for, make an offer first, get it under control, get it under contract, take it off the market, take it away from other buyers or tenants, then conduct your due diligence and go deeper into what you're looking for and what you need to look for during the inspection period. No, there's no sense of overanalyzing a deal when you don't have a deal. So if you spend weeks and endless time and money in overanalyzing a deal, and you're ready to commit, and then you find out the deal is gone. So it's important to make an offer first, look at the property. If the close matches what you're looking for, make an offer, get it under control, get a deal, get a signed contract, and then start your due diligence, which that has been the winning strategy to make that deal. So no secret, get the offer going, and that will get you the right deal before anybody else. So that helps. So we try to keep it short and simple, as many of you have suggested, and we'll keep putting out more information on a weekly basis. So you guys keep following us. We appreciate your comments, we appreciate your feedback, and we appreciate your business above all. Our team is happy to help many businesses with this leasing and sales of industrial space here in South Florida, and we have done many deals with refrigerated and cold storage facilities, and also land sites, industrial land sites for companies that we represent. We'd love to be of service if you're looking to lease or sell a property here in South Florida or across the country. We can connect you with one of our members of CCIM or SIOR, and they're insured to work in the same ethics as we do. Well, thanks for following us. Again, you can visit our website, warehousesmarket.com, for all our latest deals, our latest information, and all the news on industrial real estate. You can find me on Instagram at Edison Industrial. You can find me on Twitter at Edison CRE. You can find me on LinkedIn at Edison Vasquez PA. And as always, you can listen to this podcast at any time on demand on Apple Podcasts, Google Play, Spotify, and all the podcast platforms. Additionally, you can watch this episode on our YouTube channel, youtube.com/Conreal Edison. You'll see all the episodes along with all of our videos that we make with tips and information on the industrial real estate market. Well, thanks for following us. Don't forget to subscribe, leave us your questions and your comments. We appreciate it. We'll talk next time. Take care, be safe, be profitable. Take care.